we kick things off with the record start to 2020. Sea of green on Wall Street today. The S&P, the Dow, and Nasdaq all closing at all-time highs. So should investors just keep riding this record wave, or is it time for a new strategy for a new year, Steve Grasso?
Well,
can we just sit tight and be happy, or what do we need to do?
I think you can, but all traders are not back until Monday.
Yes.
This is still a holiday week. So think about what worked last year. That's what worked today. Tech.
Yep.
Industrials actually are ripping today. Communications ripping today. So I do think you can sit back, but beware of a sell-off Q1.
Dan?
Does that sound a little ironic the way I say that and a little pensive? But yes, you do have an opportunity to buy a dip in Q1.
But I remember you saying, so last time I was here, you were saying basically the same thing. Beware the Ides of March, basically, or something like that.
Yeah, I mean, listen, it's not particularly healthy to have these mega cap names, Microsoft, Apple, double the performance of the S&P on the opening day of the year. It probably doesn't get much better than that. I don't mean that they're not going to go up further from here, but that concentration of those mega caps has been an issue, right? They're increasingly, if you look at what Apple did, it was obviously going to 300 today. What did the S&P 500 do in the last hour of the day? It kind of dragged it up here. So that sort of performance reminds me a little bit about what worked in late December 2017 into 2018, and we had an S&P 500. We had a Nasdaq up 8% as we headed into the bulk of Q4 earnings in the last week of January. So these sorts of setups are really treacherous in a lot of ways for a lot of investors, because if you didn't do a whole heck of a lot in a year like last year when the S&P was up 28%, you didn't do anything basically to reduce your risk, you're going to start thinking about it now. But to Steve's point, if everything is going to continue to work until we have a reason to sell, and that may not be until earnings, it's kind of hard to get out of the way in the meantime.
We climbed a wall of worry, Karen, in 2019 that was basically defined by trade. It now looks like there has been a breakthrough on trade. Maybe that wall of worry maybe it's still there, but maybe it's not as steep as it was.
Maybe it's not as steep. I mean, we have a supposed date for a signing of the first of the phase one, whichever that is. I don't even know. Well, I don't even know what's in it. I'm not that impressed with
that anybody knows what's in it.
Well,
really
it's a secret deal. It's very secret, and we may never know what's in it. So I'm a little skeptical on that. Clearly, if there were troubles there and that didn't happen, we would see a big whoosh down in the market. But, I mean, Dan touched on it. When Apple's up, on no news that I saw today, no news, Apple is now worth, however many $1 billion more. That's scary to me. I do own it. I'm a little nervous about it because when you have a big run up into earnings, that bar is higher and higher. And they could if they keep running up like this and have a blowout quarter, still might not be enough to sustain where it is now. So I hate when the market moves like this on. I understand.
No news.
Doesn't it give you a little faith, though, that you're starting to see, you might see a little bit of a multiple expansion with Apple? I know it's for a value person.
We've seen a multiple expansion.
Right. But for that to continue.
Why. It's been deserved. The mix of the business is definitely changing.
I totally get everything that would worry you, and Dan said it, too, in the past. It is still a hardware company, but when you look at services and that number at $46 billion, when you look at streaming along with that and everything else that seems to be clicking, that to me means further multiple expansion. I wouldn't be nervous about it.
We saved the guest for last.
Best for last.
Best for last, guest for last.
I think I agree. Today is kind of a vacation day. I mean, it's a pseudo vacation day. Most people aren't sitting at their desks.
The traffic was great coming in.
Exactly. That's the tell, is that nobody's here in Midtown trading. And I think that the moment of reckoning comes next week. And our models, so we track, a variety of predictive signals, and our best short-term predictive signal is earnings revisions. And what we're noticing is that earnings revisions, there are more downward than upward revisions over the last 30 days. And actually that revision ratio is trending way below average, which is never a good sign for the next couple of months' performance. So I think we're going to see an up year again, nothing like last year.
It'd be too much to expect that you would have a year like this year.
I think that would be
right?
Kind of, I mean, I don't know what gets us there. Maybe if interest rates go to 0 or negative and there is literally no place to go except the S&P 500, maybe we get another blockbuster year. But I do think that the first quarter is going to be a little bit messier.
I guess I remember. Was it 07, 08 that were the two big back-to-back years?
Yeah, 07. Hey, Karen made a really good point. I think piggybacking on what Savita just said. When you have this big run into earnings season, expectations really high. It sets up as a difficult setup. And I'll just say this: if you're a management of a company and you realize that your stock price dramatically benefited from multiple expansion the prior year when you did not have meaningful earnings growth, and now you're going to guide for 2020 in the next few weeks, you're likely to be a bit more conservative than you would be otherwise, because the pain that you will feel if you get that wrong, right? If you actually give overly aggressive guidance, and then not only do you miss, but then you have to guide down again for the full year, that's how stocks get put in penalty boxes in a meaningful way, right? So I just think that the idea of conservative guidance for at least the first half of 2020, especially as we don't know what is in that trade deal and when phase 2 comes, that will continue to be a headwind, at least on management, how they think about CapEx in the first half of this year.
I said 07, 08. I'm older than I thought. I was thinking 97, 98.
Oh, 97, 98.
Those were big back-to-back.
Yeah, but 06, 07 were good years, and the market topped out in November 07.
The 96 and 7?
Yeah, I think so. Well, 98, the Russian debt crisis happened in August.
It was 96, 97.
Those were big years.
Were the big years.